Okay, this is Chapter 11, Fraud and Ethics. How do you define fraud and embezzlement? Fraud is lying on financial documents to benefit yourself or your company. Embezzlement is stealing assets or money from your employer or some sort of organization to gain wealth. Second question: what are the causes of fraud? The causes of fraud can be someone is in a bad situation and they need money and they see their employer doing well and they want to steal from them. It can also be from pressure from your employer. Your employer wants you to lie about something so that the company looks better on financial statements. This would typically apply to a management position. A good way to understand why fraud happens is the fraud triangle, and the three portions of this triangle are pressure, opportunity, and rationalization. And those three things come together to kind of encourage fraud to happen. So pressure from an employer, an easy opportunity to do it, and then you finding a way to make it make sense that you're doing it. So that would be rationalization. Alright, third question: what types of fraud are there, and what are some ways to monitor it? There's a couple types of fraud. One would be stealing assets, like money. Another is kickbacks. You can misuse company credit cards. There's a lot of other things you can do. There's a lot of steps an employer can take to watch for fraud. Some steps they can do is to hire a CPA to look at your financial records and make sure everything looks good. You can also every year force employees to take vacations so that you can put someone else in their position, and whoever replaces them can take a look at what they're doing and do their job, and if there's incongruencies there, then they can see that the other person's cheating. Alright, fourth question: what are ethics, and what are the consequences of having poor ethics? So ethics, I'm sorry, this was chapter 12, not chapter 11. Anyway, ethics and what are the consequences of having poor ethics. So ethics are the act of making a good decision or the right decision in a circumstance where it'd be very easy to make a wrong decision. So the pressure from your employer to come in and say, hey, we need you to kind of lie or fudge some numbers for our business to make us look better, and you decide that no, that's not the right thing to do. I'm going to make the right decision even though this is what I'm told to do. The consequences of having poor ethics can be so if you make an unethical decision and you decide to, let's say, blow a bunch of your company's cash, this can put your company in a tight spot and you might have to lay off some workers. This can have some unintended consequences as far as your community. People will lose their form of income, they'll go into hard times. A lot of unintended consequences can occur from that. There you go. So next one is chapter 11, audits and auditors. What is an audit? An audit is the examination by an auditor to look at financial documents of a company or whatever it is to ensure that they're all legitimate and they're not lying and everything's accurate. You also want to make sure that they're following the GAAP, or the guidelines or the generally accepted auditing standards. This keeps everything consistent and keeps all financial documents and audits the same. What is the difference between accounting and auditing? So accounting would be the actual formation of documents and incurring a lot of information together and putting them into documents to summarize financial events. And then what an auditor will do, they'll come in after this and ensure that all these documents are correct and all the information is correct so that they're not lying or committing any sort of fraud. and make sure that they're following the GAAP, the general accepted, the general accepted auditing principles, I think, or accounting principles. That's what it is. General accepted accounting principles. So what are the three main types of auditors? The three main types of auditors are the certified public accountant, or a CPA, an internal auditor, and a governmental auditor. So next question is, what does a CPA do, and how are they different from another type of auditor, the other types of auditors? So a CPA does things such as like tax planning and making sure that your taxes are all correct, and it can also do consulting for like a management to ensure that everything looks good, and like the audit will go through whenever they are audited by another auditor. To be an auditor, or to be a CPA, you have to have a degree and pass a state exam. This is different from another kind, an internal auditor, because I think they're nationally a national like test is done for them, but for a CPA you have to do a state test. And these people don't work for like a government or necessarily like a company. They wouldn't be like an inside person or a government person like the other two types of auditors. So then the next one, what is an internal auditor and what do they do? And an internal auditor works for a company typically and makes sure that records are accurate and that everything is like smooth within the company. Audits are all looking good. They want to make sure that they're using like an internal auditor will make sure that a company is running smoothly and its resources are being used well. They also have to pass an exam, but it's a federal exam, so this is different from a CPA. Sixth question: what does a governmental auditor do, and how is it different from an internal auditor? So a governmental auditor will come in for a government agency and look at someone's financial documents, make sure there's no fraud or anything like that. They could work for the IRS, or they could even work for the Alcohol and Drug Enforcement Agency, because a lot of people who like try to embezzle money and stuff, they try to do like drugs and stuff, they embezzle money, and the way they get caught is they look at their taxes and financial documents to catch them on that. So this is like a government service as opposed to like the other are in the private sector, so that's different from the other types of auditors. What criteria must the standard audit opinion meet, and what are its parts? So this is the most common document issued by an auditor. It makes sure that like all the financial documents are looked over and they follow the rules of the GAAP. The auditor shouldn't be within the company, so that he's not like biased towards the company, and he should also follow the GAAP rules. So those are like the criteria they must meet. And the audit is split into three parts, and it is the intro paragraph, the scope paragraph, and the opinion paragraph. The next question. What are 7 parts to a standard audit report? Okay, so there's the report title, the report address, the introductory paragraph, the opinion paragraph, the signature of the CPA firm, and the audit report date. And this can like vary, but it typically follows this format. It's pretty reliable, I think. Okay, the 9th question. What are 3 other types of audits, and when are they used? So there's a qualified audit report, and that's where a company follows like most of the rules of the GAAP, but it like messes up a little portion of it. So maybe like kind of accidentally messes up a portion of the rules, and that like kind of it targets that. There's also an adverse audit report, and this is whenever there's like an inaccuracy within the report, the way I looked at it, it seemed like it was more intentional than the first kind, but these all seem to have like very similar type things. So the last type is a disclaimer audit report. And this is when an accountant's unsure if the information is complete. So it could be like if the auditor is within the company and it can't like ensure that there's no bias and it's not taking like an impartial look at it. 10th question, what are the other services provided by an auditor? And then like kind of briefly describe them. There are special reports, and I'm sorry, the questions are mixed up. So actually it is, the next question should be, why are audits important to everyday people? So audits are important to everyday people because they want to be able to look at a company's financial standing, and they want to know that that information is accurate. They don't want to take a gamble on a business knowing that maybe this information's fudged, maybe they're trying to look better so that more people will invest in them, and really they're lying the entire time. This could be a really unstable bet, like in the stock market. So to everyday people, an audit's really important because it's hard to understand these financial documents, and they want to make sure that they're accurate. So the very last question is, what are other services provided by an auditor? And then briefly describe them. So there are special reports, and this is like a report that's not typically used, but it'll show that a company has like complied with everything that they've agreed to. It's like a kind of a reinforcement that the company's good. A foreign financial statement, this would be like a financial statement that could be used in another country, so an auditor or a accountant or auditor would have to be familiar with the rules of another country. Personal financial statements, this is used to look at a person's finances for like a third party. Reviews of interim financial information is a document that looks at like financial information periodically to make sure everything looks all correct. There's also a compilation of financial statement, and that's like everything put together, and you want to look at them all together and make sure they're accurate and they're good. So that's chapter 11 and 12, and that's it.